Well, I'm not saying equal. I'm just saying that they've continued the trend of trickle-down economics, and that started under Reagan. And that trend of trickle-down economics just has not led to better working conditions for the average person. It's not.
Welcome back, everyone. Good to have you here. So what we have in this one is a conversation between two people with very different views on how wealth, taxes, and the economy actually work in this country. One side is coming in with strong opinions on why cutting taxes for the wealthy is good for working people. The other side is an economics-trained debater who is not letting a single claim slide without putting it under a microscope. And what happens when you combine confidence with a knowledge gap in a live debate? It gets uncomfortable fast. Stay all the way through this one because the ending is genuinely one of those moments where someone says something that completely undermines everything they argued for, and they do not even realize it. Also, really quickly, drop a comment and let me know where in the world you are watching from right now. I love seeing where you guys are tuning in from. It always surprises me. All right, let's get into it.
Sorry.
So, no, you're good. So, you think of a billionaire, let's just take one for example, Bezos, whatever. He takes out money, you're saying, into his pocket for his personal use. That's what you're referring to?
He does that sometimes.
Well,
Otherwise,
sure, I'm just
they
saying
might,
hypothetically.
otherwise they might take out like a loan, right? And they'll specifically pay for their daily expenses on that loan, and whatever their tax
No,
will
yeah,
just
I
essentially
understand
be
how all
the
that
interest.
works.
Yeah.
I'm just trying to create a hypothetical. So, let's say he takes out money. Let's say he takes out $100,000. What you're proposing is that be taxed, and he's actually getting $30,000 out of that.
Say that one more time. Sorry. You're saying what?
My AirPods disconnected. Can you hear me?
Yeah, I hear you.
Okay. I'm saying hypothetically, if Bezos takes out $100,000 and he's taxed 70%, so he takes out 30,000 that he's actually going to be able to grab.
No, that's not what I'm saying.
So
I'm
what are you?
saying
That's what I'm trying to understand. What are you saying?
tax brackets. So do you know how tax brackets work?
Yeah, I get that, but
It says
what I'm trying to
on this
I'm,
income and over, you pay that level of tax.
correct. I understand what you mean by that. What I'm trying to define is when you say when a billionaire takes money out. I'm trying to understand what you're saying when you're saying that.
Yeah. So I've explained there can be a few ways in which they do that. It could either be through the context of it taking a personal income, which is typically not done, or we can see through the context of capital gains, or we could see through the context of what's it called? The loans that people will take out as taken as collateral on their business or the valuation
Yeah,
of
yeah.
their stocks, so they can use that to take care of their personal expenses.
Okay, so let's talk about capital gains then, because I mean I think we're going into a place where we're talking about a bunch of variables that may or may not be the case for them taking money out. But capital gains is one of the things I disagreed with Kamala's campaign. And so, what's your stance on? They were wanting to tax unrealized gains. Are you supportive of that?
So, they weren't going to do that. She changed her policy on that. That was only on over 400 million, and I'd actually be okay with that. The reason why I'd be okay with that is because it would create an incentive for investors to buy as soon as they were going to sell, because this is a known sell and it doesn't change the valuation of a company. So it just creates an incentive to buy back that company's stocks for other people. So it either creates more diversity of ownership within companies and reduces inequality, or it specifically raises more revenue without actually impacting the valuation of the stock very much. Because think about it this way: there's going to be a sell, which means a bunch of people are going to be like, "I'm going to buy then because I know it's going to drop a bit, and it will just increase back to where it was."
Well, regardless of the implications of the response or the effect from the cause, what I'm trying to understand is why you think it would be a good idea to tax people on money that it has not been realized and it's an investment vehicle. So if I, for example, have a retirement account and I have $100,000 invested and that has grown to 500,000, why am I going to be taxed on $400,000 of growth before I even pull it out or have the ability to pull it out?
No one's advocating for that. I wasn't
That's
advocating
what
for that.
taxing unrealized gains is.
It's not, because we're not talking about that level of wealth.
This is the moment where you realize one person in this conversation actually understands how money works at the top level, and one person is genuinely guessing when the conservative debater said Bezos takes out $100,000 and gets taxed 70%, so he only walks away with $30,000. That tells you exactly what we're dealing with. That is not how marginal tax rates work. That has never been how marginal tax rates work. You are not taxed 70% on the full amount. You are taxed at that rate only on the portion of income that falls above the threshold. The progressive debater had to stop the entire conversation just to ask, "Do you know how tax brackets work?" And that question was not rhetorical. That was a genuine check-in. Here is what people don't realize about this moment. The conservative debater is not a bad person for not knowing this, but what makes this significant is that he was confident. He walked into this conversation with strong opinions about tax policy affecting billionaires, and he did not have a working understanding of the most basic mechanic behind that policy. That is a problem, because when you are forming your political positions around something you do not fully understand, you are not really forming an opinion. You are inheriting one. And then the progressive debater broke down exactly how billionaires actually access their wealth. Personal income, rarely used. Capital gains, sometimes. Loans taken out against stock valuations. This is the big one. This is how you live like a billionaire while your taxable income stays low. That is not a conspiracy. And that is a documented and completely legal financial strategy that has been used for decades. The tax code was not designed to catch it. And that is the conversation we should be having. You have to understand, the reason this part of the debate matters so much is because the entire argument about whether rich people should be taxed more or less falls apart completely if you do not first understand how rich people actually interact with the tax system. You cannot have that debate honestly without this foundation.
Okay, there's plenty of people that have over $400 million that are invested in the stock market.
Yeah, and that would be applicable to those individuals, not you, at
Even
500K.
Well, even if you want to say not me, or maybe it's the next guy, there's pensions, there's
The
endowments,
next
there's.
guy, you mean like the richest Americans?
I'm saying it doesn't matter who we're talking about. What
It
I'm getting
does.
at is there are people and there are also institutions that are invested into these stock market funds and individual stocks. And whether the case may be that it's a person that has over 400 million or a institution that is managing hundreds of thousands of people's of money, are you saying they're only going to tax individual people that make over $400 million? That's what they were going for.
Yes.
Okay. And you don't think that people that have over $400 million have probably a majority stake in the investments in the stock market anyway?
It depends on the individual. Now it's just gonna be taxed on small portions of that. It's not like they're taxed like 50% unrealized. Like what?
Well, I don't know. What was the percentage that they were looking to tax on unrealized gains?
They weren't looking to do that.
I saw it that they were looking to do that. It's one of the things I
Nope.
disagreed with her campaign.
Harris did not run on that for her campaign.
Well, when I was looking at the comparison between her policies and Trump's, I saw that she was,
Yeah, I know. Someone was thinking that Biden's policy that he ran on years back is the same as Harris's policy, which she did not hold to that policy.
Okay. I mean, I guess I'm indifferent on whether that's true or not. I saw it that was one of the things she was running with,
Nope.
and I disagreed with that. But
Okay, I just think that's a stupid point to disagree with, to be totally honest. Like, you're okay with the massive tax breaks to millionaires and billionaires in the big beautiful bill, but it's a big issue for you to tax the unrealized capital gains over 400 million.
well, I'm not saying it's a big issue per se. What I was getting at was I could see it having a very negative impact on a lot of people, if
Nope,
that were the case.
I disagree.
I mean, that we can disagree. That's fine. You mentioned tax breaks on millionaires and billionaires. Again, if we go back to my original point, I think that billionaires employ a lot of people in America, and I think that tax breaks could actually help the people that work for them. I
Okay,
think that's where we would
it
maybe
seems like
see
you don't
some.
understand tax brackets.
This is the part that blows my mind every single time I watch this. The conservative debater spent a portion of this conversation saying that one of the reasons he voted the way he did was because of the unrealized capital gains tax policy. That was one of his specific grievances. And the progressive debater came back with something that should have stopped the entire conversation cold. Harris did not run on that for her campaign. Not, she changed it slightly. Not, she softened the language. She did not run on it. That policy was associated with a previous administration's proposal. By the time this election came around, it was not her platform. And when that correction was made clearly and directly, the conservative debater's response was that he was indifferent on whether that's true or not. Let me say that again. He was indifferent. And on whether the policy he voted against was actually real. That is not a small thing. That is someone openly admitting that the accuracy of their political beliefs is not a priority for them. And I want to be fair here. This happens across the political spectrum. People absorb information from comparisons, from social media, from conversations, and they don't always verify it. But the difference is, when someone shows you the correction, the response cannot be indifference. That is the moment you are supposed to update. And then watch how quickly he pivoted. The next guy, you mean like the richest Americans? That line from the progressive debater was sharp because it exposed exactly what was happening. The conservative debater kept expanding the scope of who would be affected to make the policy sound more dangerous than it was. Your retirement accounts, pensions, endowments, none of those were going to be touched at the level being discussed. The policy was targeting individuals above 400 million. That is not your pension fund manager. That is a very specific and very small group of people.
So I'm telling you, the top marginal tax rate's what they save. So if you put a lower tax rate to them, that doesn't give them any more incentive to pass down that money to their employees. That gives them an incentive to keep that money and to put it into whatever is going to profit maximize for themselves.
Okay, so for example, the last company I worked for, and I know this is unrelated, so bear with me, but when the stimulus came out for COVID, they gave them to companies, right? And the companies, some of them had to do certain things with it, and some of them chose what they were going to do with it. The company I worked for chose to pay because it was salary plus commission, and so commission was down, COVID was rampant and everything. And so the company chose to pay a higher wage to its employees. They didn't have to do that. They could have used it to grow the business or do whatever they really wanted to at that point.
So because this one business did this, that means all businesses will do this.
No, I'm not saying that, but what I'm saying is
So
there was plenty of examples
we judge
out there of that
in
happening.
policy based upon what's going to happen typically in the market, not based upon the most benevolent businesses.
I mean, I wouldn't say that was. I mean, either way, I think to say that one case happening makes every other case impossible or not likely is not an accurate statement. I think there's plenty of businesses that did that. And anyway, the point I'm making is if you gave billionaires and millionaires tax cuts, and they're, I think that would, what's the word I'm looking for? Incentivize them to help their employees and be able to do wage
Yeah,
growth. And be
how
able
has
to,
trickle-down economics worked over the past 45 years?
I don't know. You tell me.
Bad.
And in what year or what time frame did they give billionaires and millionaires tax cuts to the, equal to what Trump's trying to do?
Well, I'm not saying equal. I'm just saying that they've continued the trend of trickle-down economics, and that started under Reagan. And that trend of trickle-down economics has not led to better working conditions for the average person. It's not led to lower taxes. Not lower taxes. It's not led to more wage growth for working-class Americans. It's led to actually less wage growth. Wage growth has stopped increasing with productivity when prior it did.
Okay. I mean, I'm not super informed on 45-year economics.
Oh, this ending. When the progressive debater said, maybe you don't understand tax brackets, that was not an insult. That was a diagnosis, because what followed proved it completely. The conservative debater's entire argument for why tax cuts to the wealthy would help workers was built on a misunderstanding of how the incentive actually works. He believed that giving wealthy business owners more money through lower taxes would make them more likely to pass that money down. The progressive debater flipped that entirely, and he was right. A higher top marginal rate is actually what creates the incentive to pay employees more. because paying wages reduces your taxable income and saves you from hitting that higher bracket. Lower the rate and you remove that pressure entirely. The math works in the opposite direction from what the conservative debater assumed. Here is the historical context that makes this even more significant. After the Second World War, the United States ran top marginal tax rates as high as 90% for the highest income brackets. And during that same period, the 1950s and 60s, the American middle class experienced some of the strongest wage growth in the country's recorded history. That is not a coincidence. Economists have studied this for decades. The relationship between high top marginal rates and stronger wage growth for working people is documented. This is not theory. This is history. And then came the moment. The progressive debater asked directly, how has trickle-down economics worked over the past 45 years? And the conservative debater answered, bad. He said it himself. One word, no hesitation, and then immediately followed it with, I'm not super informed on 45-year economics policies. That combination is everything. You just told me the system failed, and then you told me you don't know enough about it to explain why, but you still voted to continue it. That is the core of this entire conversation. Not malice, not bad intentions, just confidence without foundation. And that is something worth thinking about long after this clip ends. So what do you guys think of this? Leave your thoughts down in the comments, please like and subscribe, and I will see you in the next video.